Baldwin Properties, the JSE-listed developer of large-scale sectional title estates, saw its full-year profitability levels increase. The group reported a 21% increase in headline earnings per share. For more, we are joined by Steve Brooks, who is the CEO of Baldwin Properties. Steve, thank you so much for your time. Let's look back at the period that was, and perhaps you can give us some color in terms of what drove these numbers for the year.
Yeah, thank you very much for having me. It's always a pleasure. It's been a good year, a tough year. We've had lots of headwinds that we've had to negotiate. But, you know, the apartments that we deliver are good quality, and that's one of our biggest drives, is to make sure that our apartments that we deliver, that our clients are happy. And as you know, being fundamentally a development company, which is equal to being a builder, it is never easy to keep every single client 100% happy. But we are honest and we try our best. And then obviously all our greening is very, very important to me. I'm on the Green Building Council, and we really are pushing to make our greening a hell of a lot better. And obviously in light of load shedding, we're doing some phenomenal groundbreaking work to try and alleviate our clients' problems. As you know, we had a nice, interesting problem last week at Bonyaka, but we've got through it. And I think going forward, we're going to be looking at more and more things to help our clients and to help the country through, in a small way, through this difficult period in our history.
When you look at the demand for apartments, perhaps we can break it down from a regional side of things. Where are you seeing the biggest demand when you look at the different provinces, I suppose?
Yeah, we are quite blessed. We're in 4 different geographic nodes, which have got phenomenally strong demographics. At the moment, the big demand is in the Western Cape. But, you know, we've got to always remember that, you know, Gauteng, Tshwane are still the financial capitals of this country. You know, we have great demand in KwaZulu-Natal, but, you know, I still think Gauteng, Johannesburg, Egoli is going to bounce back. I'm still confident of that. Hopefully our new mayor can help to restore this city back to its glory. And then, you know, it's still where everybody lives. So we're very happy in all 4 nodes, and the strongest being in the Western Cape.
I have to get to that, the strongest being in the Western Cape. What's driving that migration as compared to Gauteng? I mean, what have you picked up in terms of trends or data analysis over the years?
I think the biggest thing that's driving it in the Western Cape is the infrastructure. You know, the Western Cape do a lot of work. Their road building is exceptional. The infrastructure that they're doing is great. We're also helping in a very small way with some infrastructure. But, you know, the city is run very well, and the province is run well. So, you know, Gauteng, Egoli has still got fantastic infrastructure. We just need to clean it up and look after it.
In this environment that we find ourselves in, which is quite tough, I mean, high inflation, high interest rates, what does that mean in the short to medium term when it comes to demand for residential housing? How are you seeing things?
Look, short term, it's going to be a tough year. You know, as I said to all our management, this year is going to be tough. We've put a whole lot of incentives. We've got a very nice CEO incentive out there. We've got a first-time homeowner incentive, which I'm very proud of, which gives the youngsters that are looking for homes a chance. It's going to be a tough year going forward. But I think, you know, everything's cyclic. This is the 3rd tough economic climate that I've been through in my 28-year career at Baldwin. So we'll get through it. We have to work harder. We have to be more resilient. And I honestly believe the interest rates will drop. And when they drop, we're here.
From a selling price perspective, which collections are driving, I suppose, or rather recording higher selling prices, and why?
We have our spectacular green collection, which is our barn-style architecture, which was developed for below $1 million. And that is selling at $599 for a lifestyle apartment, which is basically a 1-bedroom apartment. And that is the area where I still think there's going to be the biggest growth in our brands.
Before I let you go, what will you and the rest of the team be focusing on for the first half of the year?
We're focusing on good quality, getting all our snags and little defects here and there sorted out to keep our clients happy. And then we're also focusing heavily on our green, which is basically to do black water harvesting, which my partner Rodney Gray is really driving hard, and he's really good at this. And also our energy department under Matthew Wally, We are trying hard to make our developments more sustainable and more load shedding proof as we go forward.
Steve, thank you so much for your time this afternoon. That is Steve Brooks, who is the CEO of Baldwin Properties. That current share price up about 2.8% on the back of those numbers. But moving on to more markets news, Asian stocks and Wall Street futures struggled as U.S. debt ceiling negotiations approached crunch time after stalling last week, while lingering banking fears and fresh geopolitical worries also capped sentiment. U.S. President Joe Biden and House Republican Speaker Kevin McCarthy will meet to discuss the debt ceiling less than 2 weeks before the June 1st deadline, after which the Treasury expects the federal government to struggle to pay its debts. In terms of financials locally, Netcare upped its dividend 50% year on year to 30 cents per share, in line with its policy of returning 50 to 70% of adjusted headline earnings to shareholders. Despite declaring a higher interim dividend following greater profits, private hospital operator Netcare has warned about the impact of nurse shortages in South Africa. To talk to us about this and more, we're going to be talking to our market analyst. That would be Bright Khumalo from Vestec Asset Management. Bright, let's get right into it. Your assessment of equity markets right now and what's driving them.
Sure. I mean, if you're talking about global markets, I think the word of the year is AI. And if you're talking about local markets, I'm not sure what's driving markets right now, but the weak rand is not working into our favor, and that's probably the reason why we've seen SA Inc. This includes local retailers, local banks and the likes, losing a lot of value, since those allegations made by the U.S. embassy or the U.S. guy basically saying, we put arms into, Russian vessels last year. So since then, the rand has sort of tanked, and SA Inc. has been, a byproduct of that conversation and sort of weakened with the rand.
So on that note, then, perhaps you can school us. Why is AI being the word, I suppose, the buzzword when it comes to global markets?
Well, you're seeing companies like, the likes of Google, Microsoft, do their different learning tools, which apparently now everything's been called artificial intelligence, is trending. You're seeing those share prices go up, and this is obviously on the back of the success of one big tool called, ChatGPT. Which is made by OpenAI. So from then, we've seen a lot of interest in the venture capital space, and obviously in the listed space as well, where investors said, okay, which companies have AI capabilities now or could develop in the near future, and you've seen those companies benefit. But one of the biggest beneficiaries of all of this has been NVIDIA, which is up over 110% year to date, because they create the chips that most of these systems need to run on. So whether it's a server farm, based on these supercomputers or anything, they've got their GPUs essentially that make these very smart, self-learning AI, be powered by them. So you've seen those companies, do really well this year.
So quite a lot of results out early this morning. We had Baldwin, as well as Famous Brands, Netcare, including Astral Foods. But let's focus in on Famous Brands and Netcare. Which of the two caught your attention? I know you can speak on both, but if you had to pick one, which caught your attention?
Let's talk about Netcare. I always talk about Famous Brands, so let's speak about Netcare. But overall, in terms of the theme, in all of those companies you've mentioned, I think, load shedding as a South African has been an issue. In Netcare's case, they saw their diesel bill, for example, jump for almost 7-4, which is not good for a cost that never used to exist, 3-4 years ago. So this is where South Africans and South African businesses find themselves. Overall, I'd say the Netcare numbers were very good. There's nothing, surprising there. We're seeing, patient days increasing double digits, up 11.5%. Obviously, that's gonna go into top line and massively so in bottom line if you keep all of those costs intact, which is what this company has done. And you're seeing that shareholders are being rewarded for their patience there with a handsome dividend, which is up a lot, which is it's always good. It's always a good thing if you're a shareholder and they take your dividend away and then all of a sudden it comes back and it's thicker. In terms of what caught my eye in the narrative, in the management narrative there, they were saying that they have capacity of training over 35,000 nurses, whereas here currently they, by regulation, they can only train 360. That's 360, just 360 a year, which is a big bottleneck considering that there's a very large shortage of, medical healthcare, staff, including nurses in particular. This is, another problem of, typical red tapes, that businesses have to jump through in South Africa just to, make a living, which is not good. And obviously the reason why there's a shortage in medical healthcare staff is because those who can actually leaving the country and leaving a massive gap for these businesses to fill. And if, red tape, is blocking or creating a barrier for them to bridge the gap in terms of, the skills that they're losing, it becomes a very big issue. And that's what you're seeing in the net K numbers. Short term, they're good, but long term, we don't know until they can actually, train more nurses, for example, to put into their staff.
Right. With less than a minute to go, Rand trading at 19.30. Your convictions for next week, rather this week, is it 25 basis points or 50 basis points for the SAB?
Oh my word, I'm going to be a little bit more bearish and say probably 50 basis points. I would love a 25 basis point or no basis point, but I mean, the Rand has gone in the wrong direction, like I said in the intro, and that hasn't been good for the man in the streets. Yeah.
All right, Bright, let's leave it there. Thank you so much for your time. That is Bright Khumalo from Vestec Asset Management. Let's take a quick break. When we come back, we'll have news for you. Stay tuned.